Hey everyone, Couch Investor back with another video for you today. So in today's video, we're going to look at the 5 stocks I'm looking to buy in the month of March. Some of them I already covered on this channel, some not. If you want me to do new videos about these stocks or any other particular stock, leave it down in the comments below. If you see your choice, just leave it a thumbs up so I know which one is the most popular one. At the end of the video, I will also mention some honorable mentions, some stocks that also have been heavily hit by this little or big market pullback. Some stocks are down 30, 40, even 50% from their all-time highs just a couple of weeks ago. So there are some quality stocks in this market that are pretty beaten down. But before I jump into this video, if you like these videos, leave it an early thumbs up as it really helps me out grow the channel and get my videos out there. And if you haven't subscribed to this channel, hit that subscribe button and hit the notification bell as well. And I would also like to thank today's sponsor, The Motley Fool. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Fool's stock advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock advisors' average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's get on with this video. Right, so stock number 1 is Fastly. I've talked about that in a couple of videos. Obviously, all videos will be linked in the top right corner. Fastly took a major hit after earnings because guidance was a bit weak and growth has been slowing down. So as you can see here, the price before the market crash, correction if you want to name that, was $120. Today's price is at, let's say, 65, and it's down almost 46%. Obviously, since its lows last year, the stock is still up 509%. Now a quick look at the graph. The last time the stock took such a major hit was back in October when they reduced guidance because of this whole TikTok story. Now regarding the slowing down is because of the revenue. So total revenue for Q4 increased 40% year over year to nearly $83 million, net of a $2 million deferred revenue write down associated with the acquisition of Signal Sciences. Now if you remove Signal Sciences, that growth was approximately 30% or so, which is lower than what we had before, around 44%. So yes, that's why people said, oh, growth is slowing down. Maybe we should sell because this stock is this is a high flying stock with a super high valuation. So maybe it's time for a sell-off and reduce that valuation because it's slowing down. Now, a company like Fastly, I don't think is going anywhere after the pandemic. Is it slowing down? Is it still because of that TikTok hit? Maybe. Is the company maybe a bit conservative with guidance? Most probably because they've done that before. Companies will still want their content to be delivered at super speeds. They want their customers to be happy with the content that they receive. So in my opinion, a company like Fastly will not be going anywhere anytime soon. Right, so that was Fastly. Now my number 2 stock is a stock I own, which is Palantir. I've talked about that as well. I'm a very, very big fan of what they're doing, and I think this company is going to be incredibly big in the future. And looking at the graph, we can see that we're sitting at a really nice support that we've seen all along the way since November, in January, and now we're here. Obviously, if the market continues to see major red days, we could see the stock go down a bit. But as we've seen Friday, you can see the stock has actually gone down almost as close as $20, but closed the day right over that support line. Now, a couple of reasons I'm extremely bullish on Palantir. So first up, government contracts. We know they have the Gotham platform, Foundry, and Apollo. Now for government, it's obviously Gotham. Now securing those government contracts means that they know they're already set for a couple of years, so their revenue is, let's say, secured. Second is the growth potential in the enterprise market. So with Foundry, they can help enterprise customers. Now they just announced that they are launching an ERP suite to deliver cost savings for AWS customers. AWS is Amazon Web Services. And thirdly, it can certainly gain from the growth, the use of AI. Palantir, as you know, helps humans comprehend the huge amount of data that is being collected. And if more and more companies, more and more people are using AI, AI can collect way more data than a human can. A company like Palantir can certainly help understand all that data. Now again, if you want me to cover Palantir again in a separate video, let me know down in the comments below. All right, company number 3 is Fiverr. It's a company I've added last month, and I will probably add this week as well. As we can see here, Fiverr is down 35% since its all-time high just a couple of weeks ago, but it's still up 967% since the lows of last year. So on the graph, again, we can see that Friday, most of the market went extremely low in intraday trading, but then rebounded to end the day, let's say, in a more positive way. We can see here Fiverr sits on that $220 mark, which was previously where the stock broke out. First time beginning of January, and then second time beginning of February. So who knows, maybe this will serve as a major support line. We will obviously see that in the next week, but for me, it doesn't really matter because Fiverr for me is a very, very long-term play, especially in the freelancing market. So if you don't know what Fiverr is, I will probably make a separate video regarding Fiverr, but as of now, their business model is basically a SaaS, so a software as a product. Let's say you're a designer, a freelancer, whatever, you can sign up to the Fiverr platform. Now, if I'm looking for a logo designer, so for example, the person that did my intro, I asked someone on Fiverr to do that. At first it was Fiverr, so everything for $5. Right now you have really, really great professionals on there that earn a very good living thanks to Fiverr. Now obviously this was accelerated because of the pandemic, but that does not mean that people will stop using their services. A lot of people maybe realize, look, maybe freelancing is much better than having a 9-to-5 job. I certainly think so. Now looking at the fourth quarter and full year 2020, so revenue grew 89% year over year. For the full year, that was a 77% growth year over year. So pretty amazing to see that. Gross margins in the 80%, and the financial outlook for Q1 and full year 2021, they still expect huge year over year growth, almost to 90%. And then for the full year, still 50% year over year growth on the top line. So Fiverr for me is one of my favorite stocks that I own currently in my portfolio. Yes, I know I could have bought it way earlier, but better late than never. All right, and stock number 4 is the trade desk. I know a couple of you have asked me to cover this video, so if you still want me to cover the trade desk, let me know down in the comments below. So trade desk is a very, very great company, but it probably scares a lot of people because of their high stock price. Now, as you know, I tweeted out, high stock price does not mean high market cap. And this is exactly the case with the trade desk. As we can see, all-time highs before was $972. Now we're at $654, down 32%. So you see that high stock price, you might think, oh, that company is probably worth hundreds of billions of dollars, but no, it's only worth $31 billion. So the chart looks a bit strange. As you can see here, back in November when they announced their earnings, huge gap up. Now we actually closed that gap a couple of months later. So maybe now it's time for the stock to start rebounding. Again, depending on what the market is going to do this week. We know there is another $1.9 trillion stimulus bill that has been passed. So maybe that is going to stimulate the market as well. Now, in short, what does trade desk do is basically instead of you, the marketer, going on each and every platform and asking them to place an ad or asking them for data information, you go to the trade desk and they will help you place your ads strategically on various platforms, whether it's TV, computer, tablet, social media, you name it, they can do it. Now, how do they make money? Is basically, let's say they purchase an ad placement for, let's say 90 cents or something. They sell it to you for $1. So they take that 10-cent profit for them. Now, obviously there's a lot more going on with the trade desk. So if you want me to cover that, let me know down in the comments below. And lastly, number 5 is Peloton. Yes, the bike with an iPad on it. I covered it once a long time ago. I was not a big fan of that because, like most people, I didn't see what was very special about Peloton. Basically a bike with an iPad. Who's gonna want to work out at home after the pandemic is over? But obviously after looking at the numbers, we've seen a couple of earnings reports since then. Numbers are pretty insane. So overall, the stock price all-time high was $171. Now it's $105, down 38%. The market cap almost as big as the trade desk since its lowest point, still up almost 500%. Now, like with most companies and graphs we've seen today, you can see that most stocks have revisited their, let's say, shorter term support line. Maybe that will indicate again that the market might be rebounding and that this crash might be over for the high valuation, high growth stocks, because those are the stocks that really have taken a huge hit. Now, quick facts regarding Peloton. So total members are at 4.4 million as of December 31st. Total quarterly workouts in Q2 at 89.1 million. Retention rate still very high at 92%. Total quarterly revenue in Q2 is over $1 billion. Now, the major issue with Peloton is that there was a problem with inventory constraints. So they addressed that. So we remain inventory constrained with longer than acceptable wait times for the delivery of our products. To directly address this situation, we will be incrementally investing over $100 million in air freight and expedited ocean freight over the next 6 months in order to improve our order to delivery windows. So there's certainly not a problem of demand for people that want to buy Peloton products. Yes, those people have probably ordered their Peloton maybe months ago. So it will be interesting to see if the coming months, when more and more countries are opening up, if still lots of people are going to order Peloton products, especially the bike. All right, and before I end this video, I'm just going to show you a couple of other stocks that have been taking a big hit. Again, if you want me to cover a specific stock, let me know down in the comments below. Let me know what you've been picking up in the last week or what you're thinking of picking up in the month of March. And that will be it for this video. If you liked it, consider leaving a thumbs up. If you haven't subscribed to this channel, hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.